One. Good morning, traders and investors. Thanks for tuning in to Pre-Market Prep with StockOdds. It's after Canadian Thanksgiving. We're back. We had to take a day off to eat some turkey, but let's go through the
Who took
futures
a day
here.
off? You took a day off.
Yeah, yeah. I guess.
I
Yeah, you
I
didn't
think
really take a
I
day
was
off.
still working. I think if I remember correctly. Of course,
Yes.
it was a long night. We had an outage on our StockOdds database. So what happened is the actual when you're in the cloud, you're running on either Microsoft usually or Amazon's cloud services. In this case, we're on Amazon. There actually was a US2 drive failure. And so,
Yeah, in AWS. Yeah.
yeah, AWS hardware failure, actually.
Wow.
And so, normally, this has happened in the past, and normally you roll over and you've got your drive images, and you just boom, it's pretty quick, pretty seamless. You can roll over and everything's back up, except that the drive images didn't take, and so
Hmm.
there was more complicated moving parts in that whole
Yes.
situation. And so now we're doing a full backup onto the new hardware, but again, out of our control if you're relying on someone else's redundancy. I see Amazon's up today.
Yeah.
I wonder.
Amazon is up
Hmm,
today. Well, maybe we should short it.
maybe yeah.
Yeah, yeah, they're having problems. All right,
Thank you for the premium. So,
yeah, we
so
got the inside news on that. Well, let me do
you
a
have the
quick.
inside scoop now. Yeah.
Yeah,
Anyway, we're not advisors. I'm not recommending. You do what you want with Amazon. I'm just frustrated because we had
yes,
we weren't able to get the lists out to subscribers today, so our apologies. But hopefully everything will go swimmingly, and we'll be back up tonight. Okay.
yes. All right, thanks for that quick update. And for another quick update on the futures, the S&Ps are up almost 1% at the current moment, currently at 44.1125 in the E-minis there. The dollar's down about a 0.25% at 105.55. Bonds pretty flat on the session, slightly up at the moment after being down quite a bit this morning at currently at 112.03. Crude down 0.7% at 85.77. A little bit of an inside day there. Gold, that's up about a 0.5% at 1873.20. And silver, that's up a little bit less at up 0.3% at 21.99, just under that $22 handle there. And Bitcoin down about 0.7% at $27,420. Bitcoin chart never wants to load, but you know what? We got Rob instead, so we can take a look at him.
Sure.
um,
Where does it really go? I mean, it's up and down. I got these alerts like for Solana and stuff like that, and it's interesting. Like it's like one day up 5%, next day down 5%, next day up 5%, next day down 5%. It's like,
yeah,
okay, nothing
it's
ever goes anywhere. It just chops around, which is a
it's
strategy
too
in and of
much.
itself. We call that, noise trading, right? So trade the
Yes.
noise versus trade the signal.
Yeah, exactly. Well, I mean, speaking of signals, there's been a few signals over the last few days. I mean,
You think?
Friday,
You think
yeah.
what's happened, huh? Do you still
There's
you
been a
still run
couple
into
things.
people that don't know anything what's going on? But
Well, I mean, we had the jobs report on Friday, and we got quite a big bull run there. Then we
that
had,
that was that was interesting, right? Because that was
yeah,
kind of that to me, and I wrote about it in our end of day wraps. Um,
hmm
was It was reminiscent of October 13th, 2022, where we had the CPI numbers. That day we had a very dramatic gap down, and this one was less, in magnitude. but it just kind of felt similar. It was like gap down, and then it took a little bit longer. On a year ago, it was like gap down and it rallied immediately, and this was like about 45 minutes of kind of figuring out whether it was going to rally or not. Some stocks closed the gap really quickly, and some stocks actually didn't even gap down. Like
Hmm.
PDD, for example, didn't gap down at all; it just opened and rallied. But the the feel of it was kind of like this is a reversal sentiment, kind of a changing of the regimes somewhat, because we'd been in this August where we had a decline. September was a decline as expected. Seasonality went pretty much on par. And then we come into October and we didn't have a very strong sort of turn of the month right away, right? We sort of like had kind of
Yeah,
opened and traded sideways a bit on that
yeah, it was a
on the
little bit of a
Monday, and
soft. Yeah.
then kind of pulled back and then rallied a little bit, and then Friday we come in with this catalyst, and so that's what kind of felt similar. Is like how the preconditions, and then we have a number, and we gap down, and then we rally and close up. And I said that when you look at that and extrapolate onto the Monday, you're probably going to have a continuation. You're probably going to have a rally because of light volume. And even though the bond futures were trading, the treasury markets were closed. So you had that disconnect a bit, and so you don't have the same ability to sort of keep equities honest in that sense. Um, and light volume expected on Monday, and so um, we expected
Mhm.
that the market to have some upside follow through and the bulls to be in charge. Then we
Yep.
had this other catalyst potentially that could interfere with that. So I just want to remind people how important it is to run and plan various scenarios, right? It's like on one hand and on the other hand. So you need both scenarios. What would be the arguments for the bull side? What would be the arguments for the bear side? What would be the arguments even for things to do nothing at all? And
Hmm.
assign a certain probability to that based on the engines of the day and the things like that. And so with a conflict that's regional in the Middle East, um, it's okay. We same story all over again to some degree, but there was aspects of this that were very interesting. So, for example, it was 50 years to the day of the 1973 Yom Kippur War, and so that was an interesting data point. The other thing was the element of surprise and some unconventional means, and the fact of what
Hmm.
all happened. And I think they're still trying to piece together all the aspects of that.
Yeah.
But it's ended up being extremely gruesome and bloody and everything else that goes with it. Um, and so the tension is this, what else, what other countries, what other uh, players sort of get drawn into this? And already, Gerald Ford battle battalion there with 110 tomahawks and things like that en route to Israel. So that brings an aspect of, hey, nobody else better escalate this, or there could be implications. So that presents the element of what happens to U.S. stock markets when the U.S. is drawn into conflicts, right?
Yes.
And the
Yeah,
natural the
exactly.
natural response would be for people to say, well, the stock market's got to go down. But if you go back to the Gulf War, the markets rallied afterwards, right?
Hmm.
So
Okay.
you look at history, and there's been lots of examples of conflicts where markets actually respond positively, U.S. markets. Now that might not be the case for example, you know, Lebanon markets or something like that, right? Or you know, or Iran or Syria or whatever. It could be completely the opposite. But the point is
Hmm.
that um, we had another engine presented on the weekend with serious implications for in the long game, right? Um, so I mentioned to my traders, watch the futures when they open on Sunday. And when
Yeah.
you saw the futures open, they gapped down slightly right away, but not even back to, Friday, low
Yeah.
or
Yeah. It
anything like
was
that.
just a slight gap.
So,
Yeah.
so it was just a slight gap down. And so I'm looking at that and going, the market's factoring in that Israel will make quick work of dealing with this and there's not going to be further escalation. That's what it seemed like to me.
Hmm.
And I looked at oil naturally moving up as expected, gold moving up as expected. US dollar at that time, the US dollar futures were also up, which is an anomaly. Normally, we talk about if the dollar's up, then you have uh, basic materials, including gold, pulling back, right? But when you have a flight to quality, when you have that sort of safe haven defensive, the US dollar is still part of that complex of, so you can actually have, when there's significant events, you can have the US dollar move and, you know, gold move up at the same time. You have to allow
Right.
for that, right? But it's very rare. It's not like it happens all the time. And in day to day, if there's no catalyst, if there's no engine like this, then yeah, dollar moves up, gold moves down, dollar moves down, gold goes up. So let's look at, my screen here for today.
Sure.
Um, Screen two there. So looking at the sectors that are performing here today, basic materials is number two, right? And
Hmm.
if we go and look at what the dollar's doing, where do we what are we seeing with the currencies here? What are we seeing with the dollar pulling back? So we had that pretty good run. We did pop up
Hmm.
into sort of what we call the air pocket, blue sky, and then we come in and we start getting this bit of a pullback, and so that's sort of changing the impact of this, and it's as the dollar pulls back, it's actually good for the stock market. As the dollar
In
pulls
general.
back, it's good
Yeah.
for basic materials. As the dollar pulls back, it is good for oil, and besides the catalyst you currently have, right?
Hmm.
So, so just you gotta look at all of your leading indicators again, and again, that was just my point about watching the futures, how they opened, what was the response, and then even going into the next morning, we did have, a pre-market low, but we were starting to build off of that even before the market opened. So the
Hmm.
slope of it was up, and then we rallied, right? And then it's follow through again today with the dollar pulling back and treasuries and so on. So another argument is, um, well, this will make it less likely for, the Fed to be that aggressive, right? So we were expecting maybe, what the Fed tool was saying off the Friday thing, the probability of a hike um, before the end of the year was what, 31%
Let's
or
see
something
here.
like that.
Yeah, I'll
You can
bring it
look it
up.
up. What the CME Fed Watch tool, you can look it up to see what it is now. But and so there's two more meetings, and there was expecting actually the potential for 25 basis point hike on both of those meetings. And so that will be pulling back, you know. It'll be like, well, the Fed's less likely to be uh
Yeah.
aggressive,
Yeah,
right?
exactly.
So
So,
if let's just pop over to the bonds here and look at what's the treasuries doing, right?
mhm.
So there's the 30 year. Well, actually, let's go to the 10 years. more widely followed here. So you can see that we got to a pretty good extreme there, and we've been bouncing, and so it's uh, it's a change, right? And it's those pivotal changes that sort of matter the most to the market. And that's why it's important to always run your scenarios and say, well, on one hand, the market could do this, and on the other hand, it could do that. And I'm okay with both. And that's, I think, why long short traders over the long sample, when I have traders that, haven't had a losing month in 10 years, some of them rarely had a losing week in 10 years. When you have people that run like that, it's because they're not exposing themselves to the direction of the market to the same extent that somebody would be that has to be right. The
Hmm.
market has to go their way
Directionally,
in order for
it,
things to go smoothly, right?
yeah, yeah.
So the long short concepts can really make a difference, whether it's pair trading or basket trading or whatever. And there's a lot of different models and strategies within that. It's not just one thing. I mean, we've
Hmm.
talked about sort of open to close trading here many times, but
Hmm.
in reality, the people that you know get on the horse and kind of be the steering committee for things are going to do much better than somebody that just wants a completely mechanical, I don't want to work, I want to be lazy, I just want to do this and this, and that's all, I want to be on the golf course all day. They may have some things that work for periods of time, but they can also change, and the edges can be lost there. So the person that's operating with that oversight and making adjustments and trading some production, like trading around core positions, trading some, holding some. Sometimes it's a matter of just firing your losers and keeping your winners. You know,
Hmm.
there's all kinds of different aspects, but those people tend to do better. But granted, it's hard to get there to that maturity. So there's a starting point where what we call the baseline. And there's nothing wrong with the baseline, but you want to mature beyond just the very simple, diet. You want to mature beyond that, right? It's
Yes.
kind of like how we grow in life. You might not have liked turnips when you were young, but maybe you like them when you're older. Something like that, right?
Yeah, something like that. Okay, so just talking about the engine of the day. So I mean, talking about the war and talking about jobs report. We also have the inflation data coming out. Well, at least some starting tomorrow. We get the
Hmm.
PPI tomorrow and CPI Thursday. So, I mean, actually, in your mind, are those more, well, they are lagging indicators, but can they be leading indicators for trading?
Well, I mean, even on Friday, it was the September number, but there was also revision for August and July if people were paying attention. So
Yeah.
everything like from July to September was higher than expected on the jobs, right? So on the non-farm payrolls. So, you can have that same thing. It can be a lagging number, but there can be other, things connected with it, like a revision um, or exactly how it's breaking it down within the PPI. Here's the categories, and some can be more relevant than others. Um, it's hard for the average person to figure out exactly what it's going to mean or what the market's response would be. Because, for example, maybe there's been some leakage and the numbers are going to be favorable to the market and the market's rallying ahead of it. You know, so
Hmm.
it's really tough to know what is likely to happen. Um, but again, it goes back to what I said. You plan for any outcome,
Yeah.
plan for follow through from today, more upside, And remember, October's not a down month,
Yeah,
right? It's
yeah.
not a down
October
month. It's a
usually
it's
is
a
a strong
volatile
month. Yeah.
month.
Yes.
And so we had a little bit of, war volatility, and maybe there's more to come,
Hmm.
right? There's probably some other surprises and things to come along. And by the way, this thing could escalate into more countries becoming involved. So
Yeah, I mean, there is that
we don't know, right?
possibility, and you want to pay attention to that. Yeah,
So
definitely.
October always has elevated risks for a number of reasons. It has elevated volatility historically, but it's not necessarily a down month. It's
Hmm.
actually an up month, right? It's a positive
Hmm.
month,
Yeah.
unlike September, which is historically a down month. So all I'm saying is just, really be prepared. And the other thing is, when you learn to find predictability, when you know, crunch out your edges and kind of know why you're taking trades and have these if then statements and have your scenarios, and then you apply yourself. October has historically been one of the best earning months for the traders that I've worked with for 25 years. It's
Hmm.
one of the best earnings months. And so I would attribute that to the additional volatility that you can get, right? So if you have predictability first, then volatility gives you those repeated chances to make money over and over again. So where you might get, one good swing trade, per week on something, all of a sudden you're getting that same product that you're trading every day with some yield for you, right?
Hmm.
Where normally have some trades that are 30 minutes to 3 hours within the day, all of a sudden you're seeing, hey, usually I only get one or two good trades a day on that. Now I'm getting three, four, five, six.
Yeah.
So it just
Right.
helps you make more money, but you first have to have that edge and the predictability, and then you can add volatility to it.
Yeah, exactly. Well, I was talking with Kenny Glick on Friday, and well, he said Friday was one of the best days that he's seen in years, at least for him and his traders. Like there's lots and lots of opportunity, and well, especially with the big reversal that provided some quite a quite a good move if you could get in on that. Uh, but for the rest of the week here, I mean, we have earnings as well, some banks to be earning, and so once they start reporting, do you expect those to be driving the day on Friday, I believe it is, that the banks are starting to earn?
Yeah, I mean, there is some expectation of corporate profits being pretty good. So, could be a good earnings season.
Hmm.
And definitely, the banks are the leaders in that as they come out. So, um, we get to a couple weeks there where, as far as the S&P 500, you have everything jammed in, and it gets pretty busy. But overall, I think the earnings season is expected to be okay. Um, there are going to be pockets of problems still from, you know, high rates and those companies that have had more of a challenge to refinance and things like that. There's certainly going to be pockets of that. And so you probably have a case of haves and have nots. You might see some people miss earnings and the stock just gets crushed, and some that beat earnings, and it really gives you a good rally. Now remember, you can be a trader that doesn't get involved and waits for the stock to settle down. After the settlement window, which is 2 days. Let it report, let it do what it wants to do, and get involved after, because sometimes it can be tough to trade the story. What I find better is not to focus on the stock that actually has the news or the earnings, but focus on stocks that might be associated, and we call those sympathy
Yep.
trades, something that
Hmm.
might follow, taking its leadership cues from that. Um, and in relationships, like Coca-Cola reports first and Pepsi's going to report 3 days later, there might be some opportunity to say, well, they're exposed in these similar areas and this is what happened. So I can take an educated, bet for earnings, but that would be it's kind of like a informed gamble. You still don't know, but you have some information to go on. I just wouldn't go full position. It'd be like
Right.
leave some in the
Yeah.
leave some powder dry for if you want to buy more or you want to get out, right?
Yeah, exactly. Well, yeah. I mean, speaking of Pepsi, they just reported this morning and had at least some good results, but we've just been chopping around. I mean, it's not a heavily followed stock for the most part, but the volume today after reporting earnings is quite low, actually. Um, actually, is that
Well,
is
and
that any?
you're gonna get that in. I mean, the defense, the whole defensive group is up. Consumer
Mhm.
staples defensive is up pretty good today, like number three. So it's not doing bad. But the whole group has been lagging on lower relative volume for a while. As most of the volume has really been going into ETFs and the Magnificent Seven and things like
Yeah.
that. And so it's really a skewed market. You don't have like really good breadth and equal sort of distribution of volume. You have it very concentrated into a few names, and that's really what the market is these days.
Yes, very very concentrated. It's the good old Pareto principle where,
Yeah.
80% of the action, 80% of volume or the winners or market cap, however you want to measure it, goes
Let,
to
let,
20% of the participants.
let's talk about something we mentioned on the podcast. You know, whether Dave and I do a good job of that or not, we do bring out some ideas that can be helpful in preparing for your week or for the next morning. But one of the things was, defense contractors, within the industrial group. So the industrial group at large might have been maybe under pressure come Monday, if the market was under pressure. But the defense contractors as an industry would have, had some reason to get involved on the long side. And they did move um, better than many of the industrials yesterday. Um, and so, you can always break down your sectors into industries and get more focused that way too. It's easy to use sort of the brush stroke of sectors, but the edges can come from working within a sector and focusing on those industries. So that was one little tidbit, and the other thing we talked about was oil would probably be up, and the same could apply. I mean, to go in and take your best oil companies that are more pure plays and more exposed to the rise of oil, and those ones that are more diversified and not such pure plays could be your shorts. So you can always work in it within a group like that too. um, so
Yes.
there's
Yeah.
always something going on. I mean, there's always a bull market somewhere and there's always a bear market somewhere within each day. And today we're seeing some of the defense contractors pull back after their good run yesterday.
Yeah,
Um,
I'm just cycling through a few here. I mean, Boeing is a little bit less defense focused, so it
well, like
seems to
Northern
be holding
Grumman
up.
is, Northern Grumman and Lockheed
Yeah.
Martin and stuff like those are, General Dynamics. Those can be, more the plays.
Yeah, exactly. Yeah,
Raytheon as
pulling.
well.
Yeah,
So,
pulling back a little bit today.
yeah, I mean, semiconductors were a little bit soft yesterday, but they've come back today. We're seeing we're seeing energy not as strong as it was yesterday, up a little bit. So again, you know, don't extrapolate too much on what you think will happen the next day. Rather, take the approach of allowing the market to do whatever it does, and you're ready for both sides of it, you know?
Yeah. Exactly. Well, that's I think that's a great note to end on. We've covered quite a bit today. I mean, I think in summary, yeah, it is just great to be prepared for the market to go either direction and to have your edge figured out. Maybe, yeah, focusing whether it's on the defensive stocks or oil stocks, figuring out where you have your edge and where that sympathy play might be, whatever
Well,
it happens to be.
for a lot of like single stock traders, ETF traders, things like that, let's just point out, something that you can really, it takes discipline. It's kind of like even in reminiscence of a stock operator about Jesse Livermore, it was like it was the sitting, not just the doing,
Hmm.
right? You have to understand that sometimes the sitting is very beneficial. That's where you're making the money. We have this notion that we have to be busy in order to get paid. Sometimes it's just being lazy by sitting there, by be patient, right? So
Well, yeah, watching the action, yeah.
so it's this point I keep bringing out all the time. And if you want to pull up a chart, can you bring up, like, say, a 1 minute chart from yesterday
Sure. Like the
of the
spy or
SPY? Let's say just bring the
sure.
SPY up, 1 minute chart of
Okay.
the SPY. So I talk about signal to noise. So if you just do these two things, you wait, you wait for inflection points, right? Transitions, gap fills, right? Your different levels. I mean, if you just wait for something, right?
Hmm.
But look at that chart there. You see this signal to noise. Once we got through, we had filled the gap at around 11 o'clock or so Eastern time. Once we got through, you see the signal to noise
Hmm. Yeah, yeah, all of
that
a sudden green
okay,
candle
it's
after
it's
green candle.
walking, if you use Bollinger Bands, it's walking up the upper Bollinger Band. It's hardly pulling back. You're seeing signal to noise. If you can just capture either the transitions, the reversals, and the signal to noise areas without getting yourself involved in all the chop and the guesswork of which way is it going and all that stuff. Just wait for it to give you something to sink your teeth into. And so the signal to noise also has timing and context.
Hmm.
So the timing is, well, the market's had plenty of time to pull back if it really wanted to pull back. And rather than doing that, it filled the gap, and now it's starting to rise above that. So what is the next levels that it could potentially go to? Where is R1? Where is R2? Where is R3? Same thing applies today. Look at the signal to noise ratio.
Yeah.
So your pivotal transition points and your high signal, low noise, if you can capitalize on that during the day, that that can make for really healthy and profitable trading.
Yes, yeah, it definitely can. Wait for that signal to show you what the move is going to be. And yeah, at least in the S&P E-minis here, I was looking at this the September 21st intraday high, at least for a little bit of resistance here. It was at 44.1850 was the high there, and we got to 44.18 so far. So we'll see if that is indeed
Yeah.
the resistance
Yeah,
point
these
of the
these
day.
previous levels, like, when you're in
Yeah.
blue sky, it's a totally different thing. You have nothing to lean on except maybe percentage of move, or you know, maybe
Yeah,
following the
percent of
macro or something like
ATR
that. But
or
if you've been down and you're retracing, there's plenty of numbers to look at. So you have your intraday framework, pivot structure if you want. You have what happened the previous day, high, low. Then you have, 5 day high, 5 day low, 10 day high, 10 day low, 20 day high, 20 day low. Have all those plus any other big reversal days could be the targets of where we're headed. So
yeah,
gap fills on the
exactly.
daily. There's lots of things to look at. So the key is Can you differentiate? Can you practice this? Recognizing noise, which is choppy, whipsaw, going, doing nothing. That's a totally different trading style. Can you separate that from high signal, where it's moving up or moving down, but it doesn't retrace very much? It's hugging something. It's very directional. It's very linear. And
Mhm.
can you get in early enough, right? And understand what the context is to help you stay in the trade. And if you can use any smoothing indicators, you can stay in it much better. Okay.
Yeah, exactly.
We're done. That's a wrap now.
Uh, all right. Well, that's a wrap for today.
That's like
Thanks
the
so
that's
much.
like the encore, we're done and then oh
Yeah.
yeah, that's an encore. Okay.
Yeah, we tend to do that. That's oh, it's fun. It's always good to share a
Well,
little bit more.
yeah. Well,
Yeah.
anything can happen here when I've had no sleep. So there you go.
Yeah. Yes, that's right. Yeah, that's when all the chaos comes. All right. Well, for the S&Ps, we're currently sitting up just over 1%, currently at 44.1625 in the E-mini futures, just off the highs of the day. So we'll see if that 44.18 holds there in the S&Ps. All right. Well, that'll do it for us. Thanks everyone for tuning in, and we'll see you all later. Next week.